Hey folks, today we are going to talk about the macro mechanics of agricultural technology. Sounds kind of boring, huh? Well, it's a perfect example of the kind of blockchain implementation I like to talk about, the plumbing. Pull up a chair and pour a cup of black coffee. Let's look past the mainstream financial headlines for a minute. If you turn on the television or skim through the internet, the talking heads are completely consumed by a handful of massive mega-cap narratives. On one side, you have the multi-trillion-dollar Silicon Valley Artificial Intelligence Club. On the other side, you have the big institutional bedrock digital commodities like Bitcoin and Ethereum. But as seasoned investors, we know that the most revealing technological shifts don't always happen in the middle of a crowded coliseum. Sometimes, the true plumbing of the future is tested in highly specialized, quiet corners of the global economy. Today, we are going to look under the hood of one of those tiny corners, a specialized network called the Dimitra Protocol. Let's be clear about something here. This is not an investment recommendation, a tip, or a call to buy a token. The Dimitra Protocol is a minuscule financial entity operating in a deeply specialized niche. Instead, we are treating it as a live case study. It's a perfect lens through which we can understand how artificial intelligence and blockchain infrastructure are going to fuse together out of absolute operational necessity over the next decade. Let's look at the pipes. The plumbing is always key with digital assets. So what is the niche? Large-scale, real-world data on the farm. Strip away the marketing terminology, and the problem Dimitra tries to solve is really incredibly old-fashioned. Global agricultural supply chains are an administrative nightmare. The protocol focuses primarily on providing enterprise-grade software tools to small farmers, rural cooperatives, and agribusinesses in developing nations. These are operators who manage real physical assets, like livestock, soy fields, cacao plantations, and fruit orchards. These operatives have historically been locked out of modern institutional finance because their data is disorganized, unverified, or entirely on paper. Dimitra operates as a decentralized utility layer. It collects complex real-world data from multiple physical inputs and saves the data on a fast, secure blockchain ledger. How does all this data get onto the blockchain? Have you heard of the Internet of Things? It's referred to with the acronym IoT. Basically, IoT is all the little sensors and Bluetooth generating mobile input gadgets that constantly monitor things like soil health metrics, livestock registration, and daily farming activity logged directly on the ground. The only limit to the amount of data that can be generated is the amount of money you want to put out to gather the data. Then there is the data created by satellite analytics, real-time orbital imaging used to monitor crop health, predict yields, and track environmental impacts. In isolation, this is just standard agricultural technology. But when you introduce necessary knowledge requirements, like strict international trade laws and automated data verification, the infrastructure requires a brand new type of ledger. The AI and crypto amalgamation I have talked about becomes more apparent and more necessary as the data gets more sophisticated. This is where the structural lesson for grown-up investors comes into play. Dimitra represents the emergence of a cross-industry model, the intersection of the PIN, decentralized physical infrastructure networks, real-world assets, RWA, and autonomous AI. The traditional banking sector simply cannot process the sheer velocity of data or the microscopic transactional fees required to run a global, automated sensor network. If a satellite scan automatically checks a farm's boundaries to prove it didn't clear protected rainforest land, that verification needs to happen frictionlessly. Let's talk about how this amalgamation actually works. The sensors send these data streams to the artificial intelligence model that Dimitra has trained with agricultural emphasis. The AI brain is central. The artificial intelligence model processes the heavy lifting of the computational data. It crunches satellite imagery, diagnoses crop diseases, and calculates carbon offset credits based on sustainable land management. The results of those AI calculations are written on-chain across networks like Ethereum, Polygon, and Solana. This creates a tamper-proof, auditable record. Blockchains act as immutable ledgers, double-entry bookkeeping systems in the cloud. Let's consider a practical, modern regulatory example: the European Union Deforestation Regulation, EUDR. Under these strict laws, global exporters must provide definitive, auditable proof that their commodities did not originate from deforested land, or they lose access to premium European markets. An unaligned, paper-based cooperative cannot easily prove this. But an AI model scanning satellite history can determine the truth in seconds, and a public blockchain ledger can secure that certificate in a format that European customs compliance officers can trust. By turning illiquid physical crops into verified digitally traceable commodities, the protocol builds a pipeline where international banks can finally underwrite trade finance and insurance for rural farmers who were previously deemed uninsurable. This is important for the future of feeding mankind. What are the tokenomics of the Dimitra Protocol? Let's look under the hood. The native utility asset of this ecosystem is the DMTR token. In a disciplined framework, a utility token is not a speculative stock share, it is a piece of operational fuel. Within the Dimitra architecture, DMTR is used to meter and settle transactions. Every time an agribusiness requests an advanced AI crop risk assessment, a satellite validation check, or an export compliance log, that service is accounted for on the ledger using the token. Because local farming cooperatives and governments deal strictly in fiat currency, the protocol operates an operational bridge. Clients pay conventionally in fiat currency, and the system automatically converts a portion of those funds into the utility token behind the scenes to settle the protocol fees and execute token burns. Here's my verdict. Look at the plumbing, not the price chart. With a total supply capped at 1 billion tokens and a circulating float that is heavily impacted by operational usage, DMTR is a microcap asset operating in a highly volatile, specialized niche. For an investor keeping a steady hand on the wheel, the takeaway here is not to run out and allocate capital to a tiny token. Microcaps carry immense liquidity risks, execution hurdles, and regulatory uncertainties. If an administrative key chokes or a single massive government contract stalls, a small project can drift sideways for years. Instead, your job is to study the architecture. Dimitra is a working blueprint of where the broader market is going. The amateurs are still treating cryptocurrency like a digital casino, and they are treating AI like a novelty chatbot that makes funny pictures. But the big money is watching the plumbing. The multi-trillion-dollar technological convergence of the next decade will belong to platforms that use AI to calculate real-world value and use blockchain networks as the secure automated highway to settle those transactions. Study the niche players to see how the pipes blend together. Keep your primary capital anchored in proven digital commodities, and never mistake a fascinating piece of infrastructure for a safe place to bet the farm. Until next time, keep it simple.